if you act in good faith, the entities absolutely protect you. And if you go to certain jurisdictions, it actually makes piercing almost impossible. So Wyoming and Nevada are the two that it's just about, like, it's really unheard of. They say it's extraordinary circumstances that you see a piercing.
Check out the website simplepassivecashflow.com for podcasts, videos, articles, and free e-courses. If you guys have any specific questions, feel free to reach out to the team via email, and we'll get you pointed in the right direction, whether it be an educational course or information about syndication deals. If you haven't read my book, The Journey to Simple Passive Cashflow, click the link below to get a free copy. Thanks to John and the Wealth and Freedom Nexus podcast. Our team is here to help you take the first step, or if you're a seasoned investor, then we're here to expand your reach into alternative investing.
Are you tired of trying to keep ahead in the rat race, only to have so much of your hard-earned money going to the tax collector? Equity doesn't pay the bills. Retirement savings don't pay you now, and there are only 24 hours in a day to work. The only solution is passive income that pays you 24/7 now, not 40 years from now. From vetted investment opportunities to tax saving strategies. Let John guide you through all the confusion and take control of your financial life in pursuit of financial freedom. So sit back, relax, and welcome to the Wealth and Freedom Nexus.
Hey there, welcome back to another great episode of the Wealth and Freedom Nexus podcast. I am your host, as always, investor, educator, and realtor, John Rickgarn. Hard to believe that this is episode 99. Technically, if I look at Buzzsprout's stats, shows that this is my 100th episode that I've pushed out since late 2021. Yes, it is in totality, but hence I started with a trailer dubbed episode 0, more of a introduction what this podcast is. So yeah, I guess if you count that, it's 100 episodes I published, but this is episode 99. So if this is the first time joining, be sure to hit that subscribe button to hear episode 100, which has been in the works for quite some time, and I'll be releasing next Wednesday for Wisdom Wednesday. A few housekeeping things. As always, you can find me on most social media channels on the W Freedom Nexus handle, YouTube, Instagram, and Twitter, I guess known as X. I say most because I still have no intentions of joining the Chinese Communist Party's TikTok. That's just my personal opinion. Won't say never, never, but no plans to at this point. Maybe Pinterest at this point is kind of on the back burner, but you can basically find me on Twitter, X, Instagram, and YouTube, and of course this podcast, whatever your platform of choice is. Now, again, if this is the first time you found me, if you're listening on Spotify, if you're listening on, well, not Stitcher, that's gone bye-bye now, but whatever your platform of choice is, Apple Podcasts, Spotify, be sure to hit that subscribe button so you never miss an episode. And if you are listening to this on Apple, if you could, please just take 30 seconds to, maybe in less than 30 seconds, to leave a 5-star rating and give a short review. It really, really helps with the algorithms, getting this podcast in front of more people, and gets up in the rankings for the podcasts like mine that publish new content every single week versus go on hiatuses or have pod fade, where I've seen as few as 3 podcasts drop on one and then they just disappeared. So finally, if you haven't already, be sure to sign up for my monthly newsletter. You'll find a link for that to easily click on in the show notes, where each month, yes, this is a monthly, not weekly, daily, or hourly newsletter, I cover 6 topics on investing to how to grow your wealth and protect what you're built as well. Speaking of protect, this has been a long time in the works, but I'm finally starting to get updates into my Cover Your Assets page. It's been a long journey to get this rolling. I had a number of partners I was working with, a couple of law firms I reached out to, and then they were going to help, and they just ghosted or no interest or whatever. And then, of course, life happens from having son to different career paths, kitchen remodels. If you follow me on Facebook, you'll know what I'm talking about there. Like I said, just life got in the way, things got busy, but finally was able to partner with a number of firms. One, Anderson Advisors, who's one of their partners is going to be the interviewee of today's podcast, but various firms that specialized in asset protection, LLC registration, and trademark protection, which doesn't get the interest, shall we say, that I feel it deserves. If you are a content creator, if you have any type of intellectual property, a logo, a saying, a book, a channel, a video even, you want to pay a particular attention to this for the trademark protection, as the laws are there to protect what you built so that someone doesn't hijack it and take over it. If you're even unsure of what all this trademark protection is, what it all entails, and if it benefits you or could benefit you, be sure to hit that subscribe button and tune into our upcoming episode, number 104, where I talked to one of the top trademark attorneys in the country. And when I say top, I mean in the top 30 of 40,000 in the United States that practice or specialize in trademark protection. Now, like I mentioned before, today's guest comes from Anderson Advisors. He is an author, a real estate investor, fellow podcaster as well, fellow YouTuber, asset protection attorney, and educator, Toby Mathis. You can find additional links to his book, Infinity Investing, as well as his YouTube channel below in the show notes. He has a lot of good content in regards to tax savings, how to save or pay zero taxes on capital gains, for instance, asset protection, corporate structuring, and one of my favorite topics, passive income or passive income investing. And he brings a wealth of knowledge and shares that every week to his over 270,000 YouTube subscribers. In fact, in today's interview, he put to rest many questions I've had in regards to asset protection, as well as the fear selling factor, fear, uncertainty, doubt that many, shall we just say, well-known gurus in this space flaunts to get more sales. Now, I'm not going to name names, but if you've been around real estate investing any amount of time, you'll have heard of them. I'll just leave it at that. So with that, we will get into today's interview after a word from one of our longtime sponsors.
For investors seeking DSCR financing, check out timothyhero.com. The guy has closed over 150 DSCR loans in the last 2 years and has been appearing on podcasts and written about by journalists. He's well connected with some of the best lenders in the game and can get you the financing for your rental properties. Hey, Toby, thanks for coming on the show. I really appreciate it.
Hey, it should be fun.
Yeah, no, I agree. And yeah, I've been following Anderson for quite some time. I love your podcast as well, because sometimes you have questions like, oh, yeah, I've always wondered that. Or sometimes I've heard questions like, I never thought of that before. And your wealth of expertise and knowledge, you and your partner, it's definitely educational for myself. And I hope my listeners find that as well.
That's the intent. We always say we're a tax and legal firm, but really we're an education firm.
Yeah, no, I couldn't agree more. So now with that being said, Toby, and like I said, I've followed you for a number of years, read your book, but for anyone out there, any of my listeners that are not familiar with Toby and not familiar with Anderson Advisors, could you kind of give us a quick overview, background on yourself and Anderson?
Yeah, that's easy. I'm an attorney, and I've been trying to, about 25 years ago, started diving into the world of asset protection and tax planning, and I'm just trying to make up for the fact that first part, that I became an attorney. Right? So I've been doing my penance. I'm a real estate investor. I'll just be straight with you, John. Clint and I, we have over 300 unique properties across the United States. Everything from apartment buildings, commercial buildings, to a lot of single family, duplex, fourplex, eightplex, 12plex. We like to do this. And then what we realize is most of the people who teach tax and asset protection don't actually do any of the stuff that they're teaching. Yeah. And it's like, I've been there. I got that T-shirt. I've been through some battles. I clerked before I became an attorney, and I saw the battles in the court, and there's a lot of BS that's thrown around out there. So we just try to stick to the stuff that works. And we're a one-stop shop. We have accountants, attorneys, bookkeepers, everybody under one roof.
Oh, wow.
We just try to allow it so that if a client comes in, that they're not being bounced around between a CPA firm and a law firm and a this and a that. And you could just ask us the question, and chances are we have somebody with expertise. We have about 500 of us. There's somebody that has the expertise to help you.
Yeah. Well, I like that one-stop shop because I myself have ran into at times or know of people where, well, my attorney says this, but my accountant says this, and they're fighting with each other, and I'm stuck in the middle. What do I do?
You keep paying them is what you do. That's what they're doing is they're like, here's $100 over to my partner over there, and they get back, and they go, there's $200 to my colleague over there, and then they get together and have a drink. And they say, what did you say to John? Well, I'm going to say this. Let's see if we can get him to bounce back one more time.
Yeah. So, no, that, Toby, I kind of wanted to dive right in. I know, you and I have chatted beforehand. And like I said, listen to your podcast. And I always try to ask my guests questions that either I haven't heard answered before or maybe just going in a little bit depth. But now I know you said, maybe we'll just start off with, you said there's a lot of BS out there, a lot of gurus, if you will. So maybe I'll start off with, there's been a lot of talk out there that, single member LLCs, and even if you're a married couple, well, it's two people, but that's a single member because you filed jointly. Does it really not offer much asset protection? Are there a lot of states, court cases where they're disregarding these single member LLCs, or is this more of a fear tactic from some other attorneys or firms out there?
No, there are a few cases where they did piercings for single member. The Olmsted case in Florida was the one that set shockwave the protection community. That was a long time ago. But what they really boiled down to is piercing means that you're doing something wrong, right? Piercing means it's not equitable for us to pretend that this entity exists. In other words, we're going to lift the veil. Hey, we're going to look beyond the entity and at the partners or the owners. And what it really boils down to, like all sorts of states have different thresholds. They have different, here's what you have to do. Like in Nevada, for example, it has to be an alter ego and there has to be fraud, perpetuate fraud, right? But every state has its own kind of flavors. But what it really boils down to is it's not fair to recognize because these guys did something wrong. There's a great case, I think it was out of Iowa, and it was a chicken farmer, right? And they're ordering eggs and stuff, and they didn't have any money in their entity. They had no ability to pay. And so they know they have no money and they're still ordering eggs, right? And the egg supplier is like, eventually sues them and says, hey, these guys were basically just stealing our eggs, right? They're trying to hide behind an LLC. Gotcha. That's not going to hold water in most cases. If you're trying to, hey, like John, let's say that I'm going to offer you a service, but I don't actually have the means to complete the service. That's fraud. They're going to look at the LLC and chances are they're going to pierce it because they're going to say, hey, it's not fair. It's not equitable to recognize this thing. Toby was doing something wrong. He knew he had no ability to deliver. He was just, but if you act in good faith, the entities absolutely protect you. And if you go to certain jurisdictions, it actually makes piercing almost impossible. So Wyoming and Nevada are the two that it's just about it's really unheard of. They say it's extraordinary circumstances that you see a piercing.
Yeah. Kind of like you said, if it's blatant, outright, common sense individual said, this is 100% fraud versus, like you said, not good faith, and, makes sense.
Like even the Olmsted case, most of the piercings involve somebody who owed somebody else a lot of money, knew what they were doing, set up the entity to try to protect themselves in the idea that I'm going to perpetuate kind of a scheme. And it was fraudulent obtainment of money, knowing that you were going to toast them. And then there's the other type of piercing, which I'll give you from court settings where they go to legal doom or something like that, and they set up an LLC online. They don't have an operating agreement. They never set up a bank account for it, and they just try to say, I have an LLC. You threw your money away. It's not going to work. You actually have to follow some basics, like you need to have a body to your business, which means it needs to not just have its filing with the state, but it's also going to have an EIN with the feds. It needs to have some sort of operating agreement or bylaws or partnership agreement that spells out who the owners are, what their rights and obligations are to each other, what their rights are to creditors, et cetera. It needs to comport with state law. It needs to have its own bank account and things like that. And then when you start removing those and saying, oh, I don't have those, then you're getting closer and closer to the court saying, you didn't respect it, I'm not going to respect it. And that's the easiest way I could put it. The amount of respect a court or a bank or anybody else will show your business is the amount of respect you show your business. And the easiest thing to do is just kind of say, hey, what would a rich person do?
Okay.
Would they run out and do this thing at 11 o'clock at night on a website and then think they'd probably contact an attorney or an accountant and say, hey, I need to make sure this thing's set up right.
Yeah, no, it makes sense. Yeah, go with the experts and get it done right. On that note, Toby, like you mentioned, like you said, where the judge, hey, you didn't do this, so you didn't respect the LLC, so I'm not going to respect it. We're going to pierce this corporate veil. Mm-hmm. On the flip side, outside of Wyoming and Nevada, and maybe this is an extreme example, say someone follows all the corporate formalities, operating agreement, separate bank account, no commingling funds, et cetera, et cetera, et cetera. But, during the process 4 years ago, there was an owner draw that wasn't properly documented. So could potentially a judge say, well, nope, you made that mistake. You didn't cross that T 4 years ago. We're just going to blow up the whole thing. Is that really applicable, or is that more fear on some other people?
Hey, everyone, John Rickgarn here. Do you want to grow your money guaranteed and tax-free and have access to liquid cash for real estate investing? Infinite banking, high cash value, whole life policies allow you to grow money guaranteed and tax-free. See what the infinite banking concept will do for you. Reach out to Barry Brooksby, the infinite banking expert, to see your own numbers. His email is barry@focuswealthgroup.com. Barry is a personal friend of mine who's helped me over the past 7 years. He'll teach you how to grow more wealth, guaranteed and tax-free. Email him at barry@focuswealthgroup.com or go to wealthandfreedomnexus.com/infinite banking.
That's fair. That's it's extraordinary circumstances when you do a piercing.
Gotcha.
If you're doing your very best and you're following the formalities, like even not having a bank account isn't considered dispositive, meaning that it doesn't automatically cause you to have a piercing. It's just a factor.
Okay.
Right. So you look at totality of circumstances. So first off, is it an alter ego, which means you're just commingling all your stuff with it? You're throwing the entity out there when you don't want to pay a bill. So like maybe you're contracting with everybody, but there's nothing in the entity. Again, it smells and stinks like fraud, right?
Gotcha.
But if you're going out in good faith and you're operating and it's separate from you and you're doing just reasonable steps to keep it separate, then the courts are going to recognize it. And the reason being is because you're paying states. Could you imagine that if there really were a lot of piercings, why would you set up an entity?
Yeah, makes sense.
Right? No, nobody would do it. You wouldn't. And just every major Fortune 500 has a gajillion entities floating around out there. They're doing it because it actually works. Real estate investors use LLCs. They do it because it actually works. If you find yourself in a pickle, but if you're trying to take advantage of somebody and you knowingly are putting it out there, like if I'm a contractor and I know I'm not going to finish jobs and I'm taking money and then I close down my contracting business and I set up another one, don't expect the court to recognize that. You're going to get pierced because you're a jerk.
Yeah.
And the court's going to find a reason to stick it to you. And that's what I've seen. I sat in court for 2 years as a clerk, and I just watched judges when they get mad, they're just looking for any reason to take it to you. When they see that you've done something dirty, they're going to try to find a reason to make it equitable, and they have that ability.
Gotcha. And with that being said, and I've heard this stat thrown out for probably close to 2 decades of 50% of all LLCs get pierced or something to that effect. Is that more so? Well, maybe that's over exaggerated, but are those the blatant frauds, the blatant misuse of it?
Yeah, I would say that first off, there's no way, and it's not even possible, right? Because lawsuits is maybe 1 out of 100, 1 out of 1,000. Out of that 1 out of 1,000 that get into the lawsuit, you're settling 99% of those cases, and then you'd actually so it's statistically that's impossible. But but when you get into a dogfight over piercing, and there's facts that support, hey, it would not be equitable to continue to recognize this entity like it was an alter ego. It was just an agent of this person. They didn't separate their finances. They took the money out of it to buy personal things, and it would be an injustice to recognize it. Yeah, it's probably 50-50.
Gotcha. Okay, so that makes sense. It's kind of one of those half truths where it's marketed to invoke fear and get more money. So it makes sense.
John, I'll make it easy. I'll make it easier. Regardless, like you need to have some sort of protection because you don't want to be low-lying fruit, but also it usually makes sense from a tax standpoint. So if I just look at stats, about 70% of people run their businesses as sole proprietorships. I can just give you right off the top of my head. It was table 17B of publication 55, or the IRS puts out what the stats are for audit rates. You're about 800% more likely to be audited than an S corp. Wow. 800%. And then when you do get audited as a sole proprietor, you lose 94 to 95% of the time. And I say 94 to 95 because you lose 94% of the time when it's a correspondence audit, 95% of it when it's a field audit. So you're going to get smashed, and you pay Social Security taxes, self-employment tax on 100% of the net profit.
Ouch.
So you're going to end up paying more tax, and it's not a small amount. Like if you make $100,000 a year, you're probably paying an extra $8,000 a year as a sole proprietor. Mm-hmm. Why the heck are you doing that? Right? Clearly, you're not paying attention, but 70% of the people do it. So my guess is that there's a lot of people out there that go online, use some, online provider, think that it's doing something, and then they're somewhat shocked when 5 years later that one action that they did doesn't stand up. So I could see those guys getting washed out. But I always just kind of look at it and go, if you're paying attention, you're not operating in your individual capacity anyway, because there's so many tax reasons not to.
Gotcha. And I think you hit on a point that I think will make a good segue to the second part. Like you said, you do a lot of tax planning for individuals, and I'll make a note. This is legal tax strategies, not a Wesley Snipes strategy or anything like that. But one question I've always wondered, now I myself have a solo 401k, I've utilized it for years, and I know you can put a lot more in that than, Roth IRA and stuff. But with it, the solo 401k I know can only have earned income in order to contribute. But then I know the tax code treats earned income subject to FICA, which for self-employed, that's 15.2%. Is there, I don't want to say a loophole, but is there any structure in place that you could designate income that it's applicable to put in a retirement fund, but not applicable to FICA taxes by chance?
It has to be earned income, but you can absolutely shelter. You can actually, I don't want to correct you, but you can put $60,000 plus a year into a Roth 401k.
Okay.
You actually can.
Yeah, probably should. Yep.
Yeah. So a Roth IRA limits for 2023. It's $6,500.
Right.
$1,000 catch up if you're over 50. But if you're doing a solo 401k, you could over contribute to your employee contribution. You could go up to 60. What is it this year? 66,000.
Yeah, I know. Yeah, I probably should clarify between the Roth IRA, 401k, whatnot. So, but yeah.
But then again, you could also convert. So, like a Roth IRA, there's limitations on what your earned income you can contribute, but you can convert a 401k or a traditional IRA right into a Roth as well and pay the tax on that.
Sure.
But your point's well taken. What people are looking at is, hey, if I'm making money, so like there's really three types of income out there. There's active income, which is, hey, I worked for it. I went to McDonald's and I made $4 an hour. They took federal taxes and they hit me with old age disability and survivors for 12.4%, Medicare for 2.9, plus there's an extra 0.8 if I make too much money. But hey, they really smashed me. And here's a fun one, John. We make almost as much money as a government, as a country, on employment taxes than we do on income taxes.
Wow.
They're almost identical. Freakish. Like everybody says, hey, the poor don't pay taxes.
Right.
Actually, they do. They pay they pay a huge amount of our taxes because they're working and they're paying the employment taxes. But that's one type of income, is the active income. Then you have portfolio income, which is your interest, your royalties, your capital gains, and your dividends. Those are taxed quite differently. Like a qualified dividend, taxed at your long-term capital gains rates. Long-term capital gains rates could be 0, could be 15%, could be 20%. It depends on how much you make. If you're making $50,000 a year, your long-term capital gains rate is 0. Your dividend tax rate is 0.
Wow.
Right? So that's portfolio income. And then you have passive income, which is, hey, that's rental income. So if I'm doing syndications, I'm doing single family rentals, whatever, and not Airbnb, that's actually goes into the first category of
Sure.
active. But, and then there's businesses that you don't materially participate in. So like you could be a silent partner in a pizza shop, and
Okay.
you could be getting that, and that's passive income. And they're all treated slightly different. The big thing is only active income is subject to Social Security taxes.
Gotcha.
Portfolio and passive are not.
Right.
So if you have a bunch of passive income, you kind of have to convert it, right? You have to get it up to that active income. How do you do that? You use a corporation usually to act as a management entity, or an LLC tax as a corporation, and have it as a management entity, pull the money up, pay it as a salary to yourself. And then you could just stick that straight in, like a guy like you, John. I don't know how old you are, but I see some gray hairs. You could probably put
I just turned 40. I got an 18-month-old, so that explains the gray hairs. So,
well, I'm just saying is that you're going to be able to put in a good chunk of money directly into a 401k, at least 22,500, I think it is. Yeah, about that, into the 401k from your salary, like just straight into it, defer it. And then the company can contribute 25%. If you want to overfund your 401k and pay the tax on it, you can, and then immediately roll that into a Roth bucket. In which case,
gotcha.
Then you pay the tax now. Depends on what your tax rate is, but you'll never pay tax again on that money or its earnings. As long as you follow simple rules.
Exactly. Well, and I always look at when you say pay the tax now, I think a lot of people are like, well, I don't want to pay the taxes. It's like, well, historically they're low now, and you know what the tax rate is. Who knows what the tax rates are going to be 20, 30, 40 years from now when you retire?
Well, we know that the Tax Cut and Jobs Act sunsets in 2025, right? So in 2026, we're back to having a 39.6% tax rate.
Yep.
Yeah, it's going to be a cold wake up for a lot of folks who've been enjoying the tax act that was passed in 2017. And all of a sudden, they're going to be like, "Whoa, what just happened?" Standard deduction goes down. There's a lot of stuff that happens as a result of the sunsetting, but there's people looking at it going, "Hey, pay now." And then you don't have to worry about it.
Yeah, I'm definitely that camp. And yeah, with the sunset, basically that just means Congress has to do nothing for that to happen. If there's one thing Congress is good at, it seems to be nothing. So I think it's fair to say 2026 will be an eye-opener for many.
During the pandemic, they were very active, and they blew out. Here's a fun one that you guys probably haven't heard of. We've lost about 300,000 tax professionals in the last 2 years.
Oh, I know it was a lot. I didn't know it was that many.
Yeah, it's scary because nobody wants to deal with this. Like, Congress keeps changing laws, and they put it on the IRS, who then puts it on the tax professional. Everybody calls up their tax professional, yells at them, screams at them. The IRS is screwing up. They weren't processing their mail, so you could file it. You're filing an extension, or you're filing an amendment, and the IRS doesn't recognize it, starts sending you, I'm going to levy on your house, and you call your tax professional and scream at them. They left. They're like, enough of this. So Congress did that.
Good old unfunded mandates. It's funny how they always have unintended consequences. So with that, Toby, and you mentioned, as we close out this on the tax side of this, and just last week, I got a notification, one of my small investments, 1K1 I got in March. Yeah, it was like 2 days ago. But another one they just announced, it's going to be September before we get it out. Well, by my calendar, it's April 15th. Depending on holiday, 17th, 18th, somewhere in there. Why is it April 15th tax day? It just seems like such an arbitrary date, like someone threw a dart at a dartboard once upon a time.
It's because technically that's the date you're supposed to have paid your taxes for last year.
Okay.
So realistically, you have an automatic extension until October 15th. So the actual tax deadline for filing your tax return is October 15th, but your date for submitting your taxes and paying your taxes for 2022 is actually April 15th.
Gotcha.
And that's why they allow you to make contributions to your IRA and things like that up until that deadline. Okay. But this is where it gets really twisted. You can actually still do tax maneuvers for 2022 up until October 15th. If you have an S corp, it could be September 15th. That's why they're giving themselves that time. Because they may want to make a cost segregation election, or they may want to make contributions to a retirement plan from the employer side. All those things you can do up until you file your tax return. So in my world, I always look at people that file their taxes on time, and I'm kind of like, Let's go back to high school. Let's say your teacher said, "Hey, John, I need you to do this assignment and it's due on Friday." Or you could wait until the following Saturday, or something like they kick it out into the future.
Mm-hmm.
And you're like, should I do it early?
Guess it's due Saturday.
Yeah. So in the tax world, they're saying, "Hey, John, your individual tax return is due on April 15th, but if you want, you could turn it in October."
Okay.
Well, my experience, because I work with investors, is what your syndication said, which is, "Hey, we're not going to be done until September."
Mm-hmm.
Most don't say that. Most amend. They'll send you a K-1 that they do hastily.
Okay.
And then they fix their numbers and they submit an amended K-1 in the summer. And the problem is people that gave that first K-1 and filed their taxes, they're going to get triggered for audit now.
Oh, geez.
So you're much better if you're an investor. Just get in the habit, pay your taxes on time. Like you could pay, depending on your adjusted gross income, you could pay anything from 90% of the tax you did last year, 100% of this year's tax, or 110% of last year to avoid penalties.
Okay.
And you make sure it's paid by April 15th. So look at your last year's tax. If you owed 30,000, then you would pay 33,000, right?
Okay.
And you could still get it back if you're owed a refund, but that way there's no penalties.
Gotcha.
Like, all right, I paid my tax. Well, what if you owe 40? I don't have a penalty. I'll have some interest, but it's 0.5% a month. Like it's not too bad, right? Inflation
versus the fees, I'm guessing, or the penalties. I'm guessing they could be a lot heftier.
It could be a lot heftier. Yeah, it can leave a mark. So you just want to make sure that you're doing that, and then file your extension and quit worrying about it. Let your tax advisors do what they do. Okay. And I do this a lot with real estate investors. You're looking at it saying, did you end up with profit from your rental properties? And if the answer is yes, then quite often you can make an election to cost seg a property and accelerate some of the depreciation and offset that tax.
Sure.
And you can do that up till you file your tax return. And so a lot of times it's October 15th, cost seg, right? And then you do the study after that date. You get a good estimate, and then you do the study. And if the study is significantly different, like you get way more deduction, like you're in Minnesota, they don't recognize bonus depreciation. They make you take like a year, but you're federal, it's going to work. But you're looking at it going, all right, let's say that the cost seg study was a little bit different, and then you amend. Okay. And I don't see audits. We have over 10,000 returns a year that we file, and less than a dozen audits last year. It's like you just don't see them when you do it this way, because you're not getting conflicting 1099s and
right.
and all that. Everything's the way it should be. You're going right up until the deadline, and then you're doing it.
Gotcha. Yeah, Minnesota is known as the land of 10,000 lakes. I'm waiting for the day they rename it land of 10,000 taxes, but that's a whole nother discussion for another podcast. So, but
love Minnesota.
Exactly. So
you pay your state a lot.
Yep. I got the Emperor Waltz is at it again, but again, another podcast. So. Well, I've followed tax strategies and, ways to lower taxes for quite some time. And my head is even spinning with some of these concepts. So if any of my listeners out there, maybe they're not happy with their current accountant and or attorney and want to see other options that are available for asset protections, lowering their taxes, et cetera. You said you're an educational company. So what's the best way to reach out to get some of that education?
It's easy. Just Google my name, Toby Mathis. Just type it into your Google, look at my YouTube channel, pop onto it, and start learning. While you're at it, you'll see Clint. Some of his videos end up on my channel too, and vice versa. And just start learning this stuff. Mm-hmm. I do something called Tax Tuesday every other week. It's free. You can go in there and ask questions if you want. I had 10 accountants on last session answering questions, right? We don't charge you for that.
Okay.
Because I actually want you guys to know what you're doing, because to be honest with you, it's horrible to work with clients that don't know what they're doing. They ask too many questions, right? They're like blah, 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 and you're constantly having to spend time. It's just so much easier if you learn kind of the ropes, spend some time researching a little bit. It's so much better for you. It's so much better for me.
Yeah, makes sense. Well, and then at the end, they're not complaining, why'd you charge me twice as much as last year? It's like, well, I had associates spending 100 hours going through your crappy books and doing all this stuff that you should have known.
You know what? That's the number one thing. Bookkeeping time.
Yeah.
You have your accountant doing bookkeeping. You're paying $300-$400 an hour for bookkeeper.
Yeah.
Just get your books right in the first set. Like, just make sure you have a good bookkeeper. If you don't have a good bookkeeper, like we have them and stuff, it just get somebody to do your books, because a tax return is very easy and it takes very little time. A corporate return can be like an hour.
Yeah.
If you have good books, if you have a good balance sheet, good P&L.
Yeah. And like I said, good books, less chance of an audit and less chance of a piercing of the corporate veil. So win, win, win.
100%.
Yeah. So, all right. Well, I appreciate your time again, Toby. I love what you and Clint do at Anderson Advisors. And again, I'll have this in the show notes, but just Google Toby Mathis, check out his YouTube channel, and reach out to Anderson Advisors for the tax and legal advice you need.
Thank you for listening. Be sure to share, rate, review, and subscribe on your favorite podcast platform. For more updates, check out www.wealthandfreedomnexus.com. Remember, nothing on this show should be considered tax, legal, investment, or professional advice. This show is produced solely for educational and informational purposes. Please consult an appropriate and licensed tax, legal, real estate, or business professional for specific advice for your situation. For distribution or publication rights or media interviews, please contact the host.